morning, everybody. Welcome to my trading game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. So the new quarter begins today, and this is important because the last bit of the previous quarter, and this happens every quarter, is filled with window dressing, especially when it's been a strong quarter. You have the hedge funds that want to make sure that their statements going out to clients look as good as possible, so they're going to buy the best performing stocks into quarter end. So when you saw Robinhood continuing up, and we see all these other stocks that have been big performers in the quarter going up in the last few days, that again is window dressing, no doubt about it. Now, the beautiful thing about today and going forward is it's a clean slate. Think about this. If you have fund managers that are buying the best performing stocks into quarter end, do you think any fund managers that are like, oh my goodness, these stocks are overvalued, I want to dump them, would they dump into quarter end, or would they sell once the new quarter starts because they have a full 3 months to maneuver, and they can always do window dressing at the end of the quarter and buy those stocks back if they perform? And so really, you had very little selling of best performers into quarter end, and buying, in fact, was going on because of performers or institutions that were underexposed. And now that we're in the new quarter, you're going to have lack of buyers and most likely sellers. So be ready, folks. We're already starting the day to the downside. Generally, the first of the month sees new retail investment coming into the market because obviously 401ks, IRAs, you can put a little bit of money into the market. So sometimes that first of the month gives you a little bit of a minor bid, but overall, the selling that I'm expecting now in October should be pretty powerful. In fact, I've gone on record and said I think we could fall as much as 10% in October here for the month. All right, so let's get into it right now that I've covered that. The S&P futures are down on the morning session. Notice this, folks. Markets yesterday, this was yesterday's price action right here between this period and this period here. The markets were really choppy. And then right at around 1:30 p.m., look at the markets. This was the last-ditch effort of window dressing going on, where people were buying the NVIDIAs, or I should say fund managers, the bigger performers for the quarter. And you can see how end of quarter, just all of that money flow getting into the market. Now that's over, and look at how overnight it came right back in. Now, listen, let's be fair. Some of the selling could be because of the government shutdown. I don't want to kind of gloss over that. But at the same time, we've had shutdowns before. We've had threats of shutdowns. It doesn't really, history has shown us, and I'm all a big believer in data. Data has shown us that shutdowns don't really have a major impact on the market because the market is forward-looking. And what the market knows is that at some point there's going to be an agreement, a stopgap, a push the can or kick the can down the road, and therefore it's all over, right? And the government will get funded for a month or 6 months or a year or whatever it may be. But the point being is that in general, the media may blame the shutdown. I'm not a big believer in that. I think the key here, and you always get the truth from me, is that you're more likely seeing lack of window dressing and institutions that are saying, holy cow, we got to dump some of our positions now that it's a new quarter and the clients won't see the statements until 3 months from now. Let's get out of some of these positions, look for a pullback, and buy the pullback instead. All right. Now, again, you can see that we had this bigger dump right around 2 in the morning Eastern time, but then we have slowly crept back. Now, there was some economic data this morning that was important, and this was it right here. ADP private sector data coming in negative 32,000 jobs versus expectation for the private sector to add 45,000. Now, generally, this number has always been second class to the non-farm payrolls, but what do we know about the government BLS data? It's pretty much always wrong. And in fact, if you look back at ADP private sector data, which is done by a private company, so not government, private company, this number has actually been much more accurate. And the fact that we're seeing, again, more politicizing of the BLS labor market statistics board and all that, to me, this is now most likely going to become the gold standard of what the labor market is doing. So today we see minus 32,000, meaning the private sector lost 32,000 jobs in the last month. The question is, what will the markets do? We saw yields falling, which means a weaker economy, right? Yields falling, more likely to cut interest rates from the Fed. But at the same time, if we're slipping towards recession, that could be a major negative. All right, let's get into some other charts here. We have to check in on our S&P 500 daily chart where we continue to monitor this tightening wedge pattern. All right, so again, the tightening wedge pattern continuing here. Today we'll be opening a little bit lower. Let's see where we go. Do we attack the bottom level around 6,600, or do we fight our way back up and attack 6740 or so? That's the high end of this range. And really, I would be absolutely floored if in 1 month, meaning at the end of October, we are still seeing this market inside of this range. That would be unbelievably rare. It of course could happen, right? Even there's a 1% chance of something, it still is 1% chance that it happens. But the point being is that would be very unusual. We should see a break one way or the other outside of this range on the S&P 500. All right, the QQQ continues to hammer on this epic trend line. I love looking at it on the weekly chart because it lets us really look back and see the March 2020 COVID low. And this is another trend line that we are zoned in on. So listen, I mean, what's really amazing about this market is that number one, window dressing is over. So for me, I'm going to be targeting stocks that ran up into quarter end for pullbacks, right? So the Robinhoods, the other names like that, the WDCs, the STXs, those type of names, you'll probably see a pullback over the next couple weeks on as you see some window undressing or post window undressing, I should say. And then really looking for underperformers, because remember, there is window undressing. It doesn't really get talked about much, but essentially think about this. If you're a fund manager and you had a crappy performing stock in your portfolio, do you really want to show that to clients at the end of the quarter, or do you want to unload it, right? So for instance, a couple ideas for me, I continue to really like KDP. KDP right here, I mean, look at this daily chart over the last, this is actually the weekly chart, over the last 2, 4, 6 weeks. I mean, it's basically been straight down. This is Keurig Dr. Pepper. It's a profitable company, pays a dividend. It's been beaten down. There's probably was some window undressing, meaning that institutional money managers were dumping this into quarter end, and you could see a bounce back effect in the coming days and weeks here now that it's a new quarter. So all of these things really kind of fascinating to me as we get through, but needless to say, we'll just keep watching. The dollar today is pulling back. This is the daily chart of the dollar. So again, there's your little down day today. Not surprising to see yields and the dollar a little bit weaker after the very weak employment data today. And just a reminder, folks, we will not, as of now, we will not be getting the non-farm payrolls on Friday because, again, the government being shut down. And even if they get put back in, is there going to be enough time to release that data? Probably not. So it probably gets pushed to next Friday. That would be my guess. And then at the same point, how much fudging is going on that data by the time they release it next Friday? I can already see the number like, oh, plus 50,000 jobs. That sounds perfect. Perfect. Weak enough where the Fed would still want to cut, but at the same time, strong enough to kind of offset the ADP number and show us that we're still slightly growing in the economy. Anyways, just kind of joking a little bit, but it's sad that it's kind of, there's some truth to the joke, unfortunately. All right, the 10-year yield down again today. It's reattacking this trend line. We were briefly below, then we came back above. Looking at this on the weekly really gives you a better view of how important this trend line is on the 10-year yield. Again, it's right back to that line. We've yet to have a close on the weekly below this trend line. So let's monitor that to see if by the end of the week we close below it. Then do we confirm? I was just talking about Robinhood. Robinhood is up 285% for the year, one of the best performing stocks. We talked about it yesterday, how they've introduced now, basically gambling, which again, I have an issue with only because technically, investing shouldn't be gambling, but they're really blurring the lines by offering it on the same app as investors can invest on. But anyways, not my problem. People can do what they want with their money, obviously. But the point being is, what a move here on the daily chart the last few days. Look for major, I repeat, major resistance around 145 to 146, the high end of a parallel channel. That should be a huge level if it even gets there. We'll see. It is down this morning, but again, huge move up. And I really do think that this was a lot of window dressing the last couple days. Part of it was the news, right? I mean, they talked about, oh, we're going to offer, political gambling and obviously potentially other things as well. But at the same time, was that really why this stock ran up almost 20% on that news? I find that hard to believe. More than likely some window dressing end of quarter as well. Now take a look at this. This is a stock I've highlighted to you guys. What's this candle formation called? Okay. When you get this candle right here, what is it called, guys? And again, I'm not going to, obviously you guys can't type in, but I hope a lot of you are saying that is a daily topping tail. It's a reversal bearish signal. So this should put in a top until proven otherwise. How would it be proven otherwise? Any daily close above the high of the topping tail would negate it. Until then, this is a bearish reversal signal, which tells you SanDisk should probably fall to the downside. Now, we didn't get that on STX. STX was strong yesterday into quarter end. That's okay. We'll have to monitor that. STX, there's much more likely that we saw window dressing here because it's a much bigger company. SanDisk is only about, I think, only about $15 or $20 billion company, while STX, and we can even flip it over here, STX is a $50 billion company. So again, smaller companies are just not going to see as much window dressing because they're not as popular. Like funds can't buy a ton of a small stock because they don't have the liquidity to get in and get out. Same thing for WDC. WDC is a bigger company, had a relatively solid day. It is trading down, yes, as of this morning, but same thing. If we look at this company, it was 40 billion versus SanDisk being 20 billion. All right. Nike reported earnings yesterday after the bell, kind of a whole lot of chop on the intraday here. Overall, the stock is up a little bit. I had already given you my trading levels yesterday. Needless to say, it didn't even go to either one of them. Like it just did not. Like even if we go back to the highs, my high was 77. It only got as high as 74. And the low here was 68. What was my level? 62. And so that's what happens, right? And that's okay. I always look at these plays as having a possibility of a trade, but I need a big move to get an advantage. If I don't get a big move, then I don't get an advantage, and then I just sit on the sidelines. No big deal, right? And that's the key, is that it's okay to miss a trade or to not have it come to your level when you are in a game of high probability trading. Remember, it's not about getting in as many trades as you can. That's gambling, right? That's playing every hand of blackjack. That's playing every slot pull. It's about waiting for the setup that is going to give you the highest probability of success. You'll never be 100%. I'm certainly not 100%, but can I get my win rate to 75 to 80%? The answer is yes, when I study the charts and let the charts tell me what the trade is, not me telling the charts what they should do. Anytime I try to tell the charts, trust me, it always ends badly. It always ends badly. It's about the charts telling me. All right, a couple other stocks here. Take a look at Oracle. Oracle just continues to fall, had that big 40% move up, and it just continues to fade. Really should show you guys, don't get overexcited when you see these mega moves. This was the biggest market cap to ever gain that amount. All right, basically, it went from about a $600 billion company to almost $1 trillion here. And look, all it's done is basically faded. You had a couple updates here when they announced some deals with OpenAI, but it has just come down dramatically. Now, on the other side, we did hit a new all-time high on NVIDIA. Now, NVIDIA's fine. That's fine. For me, I don't really care about the new all-time high. It's something I take note of as a trader. But more importantly, I say to myself, okay, well, how high can it go? And what I did was I took a major pivot from 2021. Now, some of you guys may say, well, why is that a major pivot? Let's talk about it. It's a major pivot because this was the bull market run in 2021 and then the bear market in 2022. So see how it was the highest point with literally a ton of time on either side? That makes it a major pivot. Okay, we then connect that through the high pivot in 2024, kisses here in late 2024, touches right here multiple times in August of 2025. And then that makes it for me the level where if NVIDIA gets to, there should be some resistance. And notice how I say there should, right? When I say there should, it means probability wise, it's favored that it should struggle there. Doesn't mean it will, but probability, basically 75% chance that we would get a pullback off of that level. Probabilities are everything in this game, guys. Again, people out there think, oh, if I'm going to go into this trade, it's going to be a no-brainer. You know, I always hear the term no-brainer, right? And anytime I hear that, it makes me really nervous because it means people are usually over-leveraging themselves in that trade. Because if you really make yourself believe that something is a no-brainer and you can't lose on it, what are you going to do? Well, of course you bet the farm, right? You can't lose. But it's those. Number one, there's no such thing as a no-brainer, right? There's no such thing as 100%. And those are the ones where people get smoked on it when they think it's a sure thing. So I always go into a trade saying, okay, this is where probability says there should be resistance. But again, it's just probability, meaning it favors that. It doesn't guarantee that. And that's, again, so important. All right. Meta continues the head and shoulders playing out here. It just continues to come lower. That's in spite of the S&P and NASDAQ basically being right around all-time highs. That's very interesting to me. Break of the neckline. Remember, your downside target's around $650. So we'll see. It will have bounces along the way, but it is down again today. Apple's one of the few that I actually think could go up here. All right, now you might say, well, why? I mean, it's overvalued. It's the iPhone. Like, who knows if people are going to buy the iPhone? I totally agree with you on that, but I just go by charts. Remember that. And the one thing I see is, what kind of pattern is this? This is a bull flag on Apple. And what we also know is that Apple tends to be a defensive name. And so don't ask me why it's defensive, but that's the way the market treats it. So that's what it is, right? And ultimately, if this gets a pop, my short level is going to be up here. Now, I'm not going long Apple. I want to be clear on that. I am not long. I'm not going long on Apple. But if Apple makes a run up here, yes, I would buy some puts up here. This would be a huge level going back to 2020, a beautiful parallel, and I would look to short it there. All right, next up, let's go to Bitcoin here, see what Bitcoin is doing. Take a look here, guys. Bitcoin is pushing through this parallel right here. That is very, very important. All right, because it's clearing one of the key hurdles. Now, it's still intraday, but this is the kicker, guys. Even if it clears this, we still, if you want all-time highs, think about this. This was like the big fighter that was standing in front of you. This is like the testosterone steroid fighter up here, meaning that this was a resistance. It's a down-sloping parallel, right? It's breaking it. This one is the big kahuna. This one's the big boy. All right. Now you might say, well, why? It looks arbitrary, right? I mean, it looks arbitrary. Well, that's true. But look at this. If we take away this parallel here, the reason why, and I'm just getting this to clean it up, this line literally goes back to 2017 bull market high, 2021 bull market highs, 2024 and 2025 bull market highs before this big pullback. And then notice how here we got above it. We confirmed, made a new all-time high. Then we pulled back, we got below it. We got back above it, didn't confirm, confirmed, made another new all-time high. Then we pulled back, we hit, rejected. And so my point being is that if we can confirm above this level, and this is a level we talked about right here, it's the same level, just a little bit higher. It's now at around 118,200 or so. If we can confirm above that level, then I think you make all-time highs. But this one, my friends, that's the one. If you're a bull on Bitcoin, you're like, all right, we got to get through this 118,200 and confirm. Mind you, here it closed above and didn't confirm and tried to come back, and then finally it confirmed, and then it made a new all-time high. All right, so you got to get that confirmation in there to really solidify that it can do it. But this here, my friends, that's the one to watch. All right, next up, let's take a look at gold. Gold continues to grind up. It is pulling back. Yes, it did confirm above this parallel. So this parallel now becomes technical support. Now, it doesn't mean it can't break below there, but now you have to say, okay, well, this is support now. That's what the confirmation signal says. Now, could we be putting in a topping tail? That's possible. We'll have to monitor that very closely. Obviously, watching the end of the day, that could be a signal of reversal there. But as of now, it confirmed above. I do think part of the rally in gold here over the last 24 hours is probably to do with people being nervous about the government shutdown. And again, with the government shutting down, where is the obvious place to put money? Gold. And we're actually seeing Bitcoin here pick up, right? All of a sudden, notice how Bitcoin was weak. And then we got within a week of the shutdown or so, 1 week of the shutdown, actually less. It just started on Sunday. And then it was like, oh, it's looking like we're going to shut down. And all of a sudden, Bitcoin, what does it do? It starts to go up. And I think you're even seeing international buyers in Bitcoin saying, all right, US government, more disarray, doesn't give us confidence in buying treasuries, doesn't give us confidence in the US dollar. We see the dollar coming in. Where do you go? Gold, yeah, but gold's really high. Bitcoin is too, but it's honestly gold's. Remember, gold is the one that's outperforming Bitcoin and the S&P this year. Gold is just blowing it all out of the water in terms of performance. All right. Silver. Can silver continue on its merry way up to the key level of $48 to $50? It certainly looks like it's trying. We are now north of 47. 48 is your first area where it could enter some resistance, but really in reality, guys, I still think it's going, at least to $50 here. All right, my level again, if you're talking about an absolute upside target near term. Now, by the way, this isn't the cycle high. I still think silver will go even higher than that, but connecting the high from 1980 to the high of 2011, we basically get a level around $50.70. To me, that could be where this is headed before a significant pullback. And then I still think it's going higher after that even. So just keep that in mind. Now, a lot of people have asked me, is this a cup and handle pattern? The answer is no, it's not really. Cup and handle patterns, guys. Let me show you what a cup and handle pattern is. A cup and handle is a cup, which is what you have, but the handle needs to be at around a 45-degree angle or a right angle, somewhere in here. This is too steep to be a handle. So at least per technical analysis, this would not be considered a cup and handle. All right, now could this be a big W pattern? Maybe, which is still bullish, right? But again, please understand, cup and handle is a cup and then more of a bull flag consolidation off of it, not a collapse back down like this. That's not a cup and handle. All right. So just wanted to clarify that because I've seen a lot of people posting questions like, oh, is this a big cup and handle? I wish it was, because the upside target would be like $100. That would be awesome. But yeah, it doesn't fit that criteria specifically. Oil today is down slightly again. So we had this beautiful move up for 1, 2, 3, 4 days. And then we had a little reversal and then 1, 2, 3 days to the downside. And so really, I wish I had more on oil here. We're just waiting to see. Does it break here? Does it break here? Which way is this ultimately going to go? And natural gas, though, and this is the one I warned you guys about, could be due for a big move. It's continuing to rally up. Remember, this would be more along the lines of a cup and handle to me, because you have this and then look at this. That to me is more of a cup and handle pattern, because again, it's more sideways chop, which is bullish consolidation. And then you see the breakout there. All right, so just keep that in mind. Again, learning technical analysis to me is everything in this game, because it allows you to make judgments on essentially probability basis versus most people invest emotionally, right? They say, oh, this looks really good. I really believe in the technology. I believe in this narrative that I'm hearing on social media or on, these other venues. That makes sense. So I'm going to go in. Versus a technician is always going to say, well, what's the chart saying? I hear all these narratives, but I'm going to shut those out. Is the chart confirming that narrative? If it is, awesome. But really make the chart tell you, like we talked about earlier. All right, I got to get to my trading room. There should be some good trades with the markets gapping down today. Let's see where we end. First day of the new quarter, some new money flow, but also you have probably, post-window undressing likely to come out of the woodwork. Let's go and find out. You guys have a great one. Thanks for tuning in, guys. Take care.